Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're discussing the first quarter performance of two Canadian banking giants listed on the Trinidad and Tobago Stock Exchange. And of course, we're speaking about Scotiabank Trinidad and Tobago Limited, as well as FirstCaribbean International Bank. Now, both companies would have had some differing fortunes in terms of reported earnings per share. However, it could very well be said to be a tale of two differing tax events, in which case Scotiabank would have benefited from a favorable tax event, and on the other hand, FirstCaribbean International not faring so well because of a particular one-off event. Let's take a look firstly at Scotiabank Limited, and for its first quarter ended January 2019, Scotiabank reported an earnings per share figure of just around $1.05, which on a reported basis was a very impressive 27% increase from the 82 cents per share reported in the prior comparable period. Now, delving a little closer into the numbers, net interest income was up just around 3.3% from $321 to $331 million, and total revenues were up just around 2.1% from $445 million to just around $454.2 million over the period. Now, income before tax, interestingly, was around 2.3% up from $222 million to $227 million. And as mentioned, that tax expense for Scotiabank declined from around $76.7 million to just around $42.8 million, reducing the effective tax rate from just around 35% to a shade under 19%. And this was attributable, according to Scotia, due to a favorable tax credit which they recorded in the current period, and that drove their profits for the period up from $145.4 million to just around $185 million odd. Now, on an adjusted basis, if we take the effective tax rate at the marginal banking tax rate of around 35%, their earnings per share would actually be more in line with just about a 2.3% increase, or increasing from 82 to 84 cents. So that tax credit certainly played a very big part in that improvement in quarter-on-quarter earnings. Looking at their revenue composition, we see a very nice upward trend moving across from quarter one of 2015 to the most current quarter of quarter one 2019, with a nice upward trend both in net interest income in red, again from 321 to 331 million, and that other income line also, well, that actually marginally decreased from 123.9 to 122.5 million. And that other income line is composed of asset management and, more importantly, the insurance segment. And as investors may recall, Scotia has entered into an arrangement with Sagicor to sell their insurance operations rather in Trinidad and Tobago to Sagicor, and that deal is hinged on the Alinvest's proposed takeover of Sagicor, which is to some extent up in the air, or shall we say delayed for the foreseeable future. Now, at a price of around $63.59, Scotiabank trades at a price earnings multiple of just around 16.6 times and offers investors a very healthy dividend yield of 4.7%, which is above the banking sector average of just around 4%. So on the basis of very marginal growth on an adjusted basis, as well as an attractive dividend yield, but tempered by fairly fair valuations, Bourse maintains its neutral rating on Scotiabank. Turning quickly to FirstCaribbean International, and well, it was quite a case of the opposite for this particular company. Now, the company reported, or FirstCaribbean rather, reported earnings per share of just around 9.7 TT equivalent cents for the quarter, which was a 41% decrease from the 16.4 cents reported in the prior comparable quarter. Now, again, let's take a closer look at the numbers. Net interest income was up 3.6% from 681 to 705 million, and total revenue was up 7.2% from 972 to just over 1.04 billion TT dollar equivalent. Now, if we take a look at the income tax expense line, we'd see that more than quadrupled from 38 million to 166.5 million TT dollars equivalent. And according to FirstCaribbean, that was attributable to the write-off of a deferred tax asset attributable to the change in corporate tax rate in Barbados. Now, simplified, that just means that they took a one-off item in this particular quarter, which is not expected to recur, and that significantly increased their earnings per share. On an adjusted basis, FirstCaribbean's earnings per share, according to the company, would have increased from around 16.4 cents TT equivalent to just around 19.1 cents TT equivalent, or an impressive 16.2% increase. So again, in the case of FirstCaribbean as opposed to Scotiabank, that tax event, it did have the impact of reducing its reported earnings per share. Nonetheless, the company on a continuing basis seems to have done fairly well. Again, if we take a look at the revenue composition of FirstCaribbean International over the past 5 years or so, with the exception of 2017 and that particular first quarter, there has been a nice steady upward trend in its revenues, with net interest income accounting for just around 50% of its total revenues of around $104 million US dollars, as opposed to other income, which is just around $49.7 million. So that upward trajectory continues, and it seems to be that FirstCaribbean, notwithstanding some of the challenges in its major operating jurisdiction of Barbados, is doing fairly well, or holding its own ground at the very least. Now, at a price of $8.35 traded on the Trinidad and Tobago Stock Exchange, FirstCaribbean is currently traded at a price-to-earnings multiple of just around 24 times, and that's with reported earnings. If we adjust the earnings, again, to exclude that one-off tax event, that price-earnings ratio would fall to just around 13 to 14 times. And it offers a very attractive trailing dividend yield, inclusive of its special dividend, of just around 5.1%, or above that sector average for the banking sector of 4%. So, on the basis of a nice positive trajectory of its earnings, but tempered by some uncertainties regarding its major operating jurisdiction of Barbados, Bourse maintains our neutral rating on FirstCaribbean International. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.